Any advice in today's session is of a general nature only, and that your personal circumstances have not been taken into consideration. Okay, well, let's get started straight away. Let's have a look at what we have on our calendar for this week. It's the first week of the month, which basically means it generally tends to be our heaviest in terms of data and sort of volatility, which is great for trading. There's quite a few things happening this week. Well, first of all, the G20 in Shanghai just finished yesterday, so that's had an impact already, and we've seen a couple of market gap-ins in the opening this morning. We have the RBA locally making its interest rate decision. We also have China PMI data, and we have, of course, non-farm payrolls towards the end of the week. So it's a week which is generally dominated by data. And a couple of things to look out for. Let's go through them in order now to see what the market may give us, may project, and see where it may lead to the next cycle. The charts, in essence, are a little bit choppy for me this week. We'll go through them and I'll show you what I mean. There's nothing clear that says trade me, trade me, trade me, but we'll go through together. We'll make some decisions and we'll probably see if we can generate and trigger a couple of trades. Okay, so we've had basically today's a fairly quiet day, the Monday, but tomorrow we've got building approvals Australia, and of course tomorrow the big news is the RBA rates announcement. Now nobody really thinks that there's going to be a rate cut. Definitely nobody thinks that there's going to be an increase, but there is a little, if anything, it's probably 80% think it'll remain the same, but 20%, and we're not talking about, I'm talking about analysts' opinions over here, 20% of analysts are probably leaning towards a rate cut. Now, I don't think that's going to happen, but should it do, should that actually occur and we get a rate cut, we would be able to see our Aussie dollar tumble from that. Okay, so that's on the Aussie front. We also have the trade balance numbers on Thursday, so that's pure, and the and retail sales on Friday. That's pure Aussie related data. Other ones that will affect the Aussie dollar is, of course, the PMI China figures, which come out tomorrow. So actually tomorrow is quite a volatile day if you're trading Aussie dollar from midday onwards, and you usually find that in the lead up to 2:30 of the RBA announcement, the liquidity starts to dry up and the market starts to get very, very tight. Until of course we get the actual announcement, and the market then can move quite significantly. So tomorrow also, remember, around about midday we got China PMI figures, the manufacturing number and the Cakeson numbers, which is basically this one comes from the private enterprise, okay, which tends to be a little bit more of an accurate number because it's not government manipulated, to put it in a nice way. And of course, China being a communist nation, we don't know how much extent the government related figures reflect the truth. So the Cakeson numbers tend to have a little bit more weight on them. From then we go to Kiwi. Kiwi is lighter this week. We just have the GDT index happening for us, and other than that, it was nothing really much. GBP, we have construction PMI and service PMI numbers, also quite light. It's a week really dominated by the US. All right, so if we go through the US data, we have PMI data. On Wednesday, we have non-farm, the preliminary numbers and crude oil. Then we have the actual unemployment claims, and of course, in the wee hours of Saturday morning, that is Sydney time, we have the non-farm employment change number. Now, this is actually the last piece of significant data that the Fed Reserve will have at its disposal before they make a March interest rate decision, which basically means we already know that there was a rate increase in December of last year, and this was supposed to be the year of a tightening cycle, meaning that we could have easily expected to get 2 to 3, even 4 rate increases throughout 2016. Now, it started off quite shaky with equities markets losing a lot of ground, commodities tumbling, putting a whole bunch of pressure on the US dollar. But there is a small group within the analyst team that believe that they should continue with their tightening cycle, meaning to continue to increase their interest rates. The non-farm pay number is the last bit of data before that they will receive before making that March decision. Should this number not come in as expected, and if it misses the 195 number by a significant amount, it could well change the mood of the entire market, meaning investors could represent that number as the Fed Reserve will now change its mind and just put the tightening cycle on hold, and then we could see the US give up ground against all major currencies. Okay, so it is quite significant. If the number hits the mark, well, then it's kind of largely expected. So I believe if we miss it, if this number comes in lower, the move will be more dramatic than if we hit the number. Hitting the number, it doesn't necessarily mean it's going to skyrocket significantly. Okay, so if anything, missing it will have a greater impact on the US currency pairs. Okay, so that's what we have this week. I guess due to the nature of the data that we have and the week that it is, the pair that's going to be under the spotlight the most due to um, just raw data is going to be the Aussie dollar. All right, so if you're trading the Aussie dollar, please make sure you take note of these times when important information and data is being released, because it will affect your trades. Okay, all right, so let us now move on to our charts. Let's see what we have coming. As always, if you have any questions at any time, please type them in, and I will make sure that I address them for you as I see them. Let's start off with the Aussie dollar. Okay, the Aussie dollar has been trading with quite a lot of what we would call noise. It's just these, if you have a look, these spikes, we're moving significant amounts, but we're trading inside a narrow range effectively. What I just noticed leading into this class is that we just, I was able to draw this bottom line, and with this top line there, I'm starting to come into a narrow converging triangle, which could lead to opportunities of a breakout. So let's explore this. Let's have a look. Let me zoom out a little bit so I can see it all better. When I look at this way, if I just ask the question out to the room right now, what do we feel? Do we feel that the Aussie is going to break up or the Aussie is going to break down? What do we feel? Can I just get a general feel? Just type in up, U or D. I just want it's not about being correct. It's just about the feel of the market. If you have a look at this last period when I zoom this in, we can see that the market's been ranging for quite some time between say 73.50 and about 69. So what do we feel? I'm just having a look at the responses here. Okay, up we got 2 people say up, and everybody else has said down. So that's like 90% of you feel downwards. Okay, for it to go down, what does that mean for the US non-farm number? What does that mean? If the Aussie is going to go down, well, it also depends on China, but let's just look at the US directly. What does that mean for non-farm number? Are the non-farm numbers have to be good or bad? Okay, most of you are saying good, which is correct. If the non-farm number is good, that means it's good for the US dollar, which is bad for the Australian dollar. Okay, so that is the correct answer. So for us to break downwards, if we are going to trade a breaking down type trade, what you need to be aware of is that because we're in this area here, we still got to be aware of this bottom line here. So if I was to take a breaking down trade like this, I want to make sure that I have enough room at least for this area here to be my 1-to-1 point, because if it's not, it's kind of a trade that it doesn't leave me enough profit area to be able to take advantage, and it doesn't make sense. Now, if it does break down and then it breaks this one here, then it really does open the doorway for the next level below that. Okay, that's the beauty of trading with two different targets. As long as you hit your first target, it gives you the confidence to stay in the trade to attempt the second breakthrough. Okay, so if we're thinking down, well, now remember, always trade what you see. Okay, with that thought in mind, if it happens to be a break that way, would it be legitimate? Would it be acceptable to take that trade? Yes or no? Yes, absolutely. It's a converging triangle. It meets the criteria. As long as we break and we clear this top and it's a nice bull candle, it would be a legitimate trade if we are trading based on the principles of a converging triangle. So let's zoom in, let's analyze it, and let's see what we got. Now, the first thing that I was kind of hoping, according to, let's pretend we haven't noticed these triangles. Are we in uptrend or downtrend? Uptrend or downtrend? Great, we're in uptrend. If we're in uptrend, then what we're looking for, now this candle's already gone too low, but what could, if we get this candle like this today, and tomorrow we've got another one in here, and it still gave me enough room to get to that level and hit my 1-to-1, that would be a trade that I would be definitely interested in. Okay. Um, Someone has just mentioned, Lois has just said that we've got a big engulfing candle, but this is in the wrong direction. So this big red candle has engulfed downwards. Now, the problem with me trading this these two candle setups, well, there's actually quite a few problems, but let me just go through it just so that, because sometimes we think about this. The first thing is that this candle over here is the one with the fractal, not this one. Okay, so it's not exactly the candle that I want to take. That's reason number one. Reason number two is, yes, it's inside the triangle, so it would be acceptable to trade it. But reason number two is I've got no more room left before the bottom of the triangle. So my 1-to-1 point basically doesn't exist. I would have to rely on the breakdown to hit my target. Okay, and the third reason is if I was trading purely based off trend, I'm trading in the wrong direction because my trend from here is in that direction due to my moving averages, you can see. So I could only consider upward trades. Does that make sense to everybody? Does everybody understand that? Because this is something very common. Lois has brought it up, but I know that everybody thinks about it, and I get asked this question all the time. Why can't I trade this big engulfing candle downwards? Now, engulfing candles on their own, they don't really work. It's when they're placed in the correct area where the magic really happens. So for this example, I would not consider that trade right there. I will, however, consider if tomorrow I get a setup, or not tomorrow, on Wednesday, like that, inside candles there, and I've got enough room to get to the top. As long as I've got enough room to get to 1-to-1, I will consider that, and then I will hope for the break to get to my 2-to-1 or even greater. Okay, so right now on the Aussie dollar, I'm in a tight range and it's really not tradable. So hopefully I've explained the reasons why. I'm right in this hot spot. I haven't broken down, haven't broken up, and I don't have a setup in any one of the reasons that I'm looking for. So right now, Aussie dollar, just sit tight and let's see what develops out of that. Everyone clear on that? Fantastic. Okay, let's move on. Euro USD. Okay, Euro USD, last week we drew in this region and we were hoping we would get some kind of a setup around there. Now this is a really good example to show you the power of price action in the right spot. Okay, if we purely placed a limit buy in there, you can see that we clearly would have got stopped out. But because we were waiting for price action to occur somewhere in this vicinity before we took a trade, you can see that this candle here looked like we were going to get the price action, but then this one went just a little bit too low and didn't happen for us. We looked for it again with this candle. This one went too low and broke us out. We looked for it again on this candle, okay, but it didn't happen either. So essentially what I'm trying to say is that the whole idea is because this one went too high, we didn't get the inside candle situation on it. Right now, our moving averages are just touching. If we got the setup, of these two candles, let's say this one ends up being there tomorrow, okay, like that, and that would mean we would have a fractal right over here. Who thinks we would be able to trade the break there? Yes or no? Okay, I'm getting a 50-50 answer. So 50-50 saying yeah, 50 yes, 50 no. Okay, if that was to happen, we would have to look at the two moving averages to see if we're still in an uptrend or if we're not in an uptrend. Okay, and I can tell you from experience, if all of a sudden this turns around tomorrow, at the end of the candle, we will be very close. They'll be virtually on top of each other. Now, somebody said something about a channel. Let me have a quick look. Okay, this changes things a little bit. Who agrees that this would be a channel, a trading channel? Who likes that? Okay, it's unanimous. Everybody likes it. Thank you, Bijan. So what this would mean, when we trade channels, what does that mean? Channels overrule the way that we trade based off trend. So based off the channel rule, who would like to take that trade that I've just got still drawn on my chart right now? Who would trade that? Great. I would trade that. Not a problem. Okay. So that means what we're going to look for is we need to wait one day. We need to wait till tomorrow. So essentially, we need to wait for this candle to finish. Hopefully this candle finishes and looks something like that. And then when the next one starts, if we'll trade an inside candle to try and trade back up the channel. The great thing about a channel trade is that because you're right on the edges, there's plenty of room. If it does go to the other side, you could even go as far as 4-1. Okay, so there's plenty of room to take that trade, and your stop is very tight and limited. Okay, so that's the nice thing about trading in channel. All right, I didn't see that channel before I started, but thank you, Bijan, for that. Remember last week I said that let's look out for this area here. We were going to try and bounce off that in that direction because it was a breakout, and I said if we do break through, the 108 comes into it will come under threat. Now we haven't reached 108. 108 is around about here. So when you make those kind of comments, you should not be afraid to take this trade tomorrow if it shows up. Because I'll tell you this much, if 108 is going to come under threat, when you wake up tomorrow, what's going to happen is this candle's probably going to be over here, which means it's now outside of the channel, and then the trade that we were looking for is just not going to happen, and then you just walk away from it, so it just doesn't happen. Okay, that's the beauty of trading with price action. It will protect you from those situations. There's so much more than you will believe. All right, so the plan for the Euro USD is to wait till tomorrow. Let's have a look at the candle, what it offers, and we'll make a decision tomorrow. We all clear on that one? Euro USD tomorrow, if it's there, I will tweet it out. GBP USD. Okay, GBP USD was one that we also said. I actually said the GBP USD is. I don't understand the reason why it's so low. All the Brexit talk that we spoke about last week, for those who don't know, Brexit is the the acronym that it's been given, which basically talks about Britain exiting the European Union. Okay, so and all of it's the earliest that it could possibly go to a referendum is around about 3 months away, but all of a sudden the GBP is losing ground and losing ground and losing ground. All right, it's weakening and weakening and weakening. It appears it's a little bit illogical that it should be a lot stronger than where it is. However, it just keeps on losing ground. Now, that alone is not a good enough reason for me to trade it. I will only trade if I see a true signal. I did say last week, so let's look for a signal, for a rebound kind of signal, and I said let's look for it at a double bottom. Price action protected us. We got this big candle right there, and I thought we might get it here, but then it was followed up by this candle, breaks through, and then just kept on going down. So right now I have no interest in buying. It would be illogical for me to buy it, other than it's pure 100% speculation. I don't have any evidence to take a trade off that. Okay, so what I'm going to look for with this one is I'm interested in selling, to be honest, and I'm looking for a pullback. If I can get a pullback in that hot spot, then I'll be interested in selling it again, as long as I get the price action for it. Now, there is one thing that I am curious about. I just want to see what fib level we are at this. It just looks like it could be a Fibonacci number. Give me one moment. Okay, so when I do a fib extension from A to B up there, this level here is the 127, but we've broken through it. This candle is a very strong breakthrough. So if you wanted to attempt a long, you'd have to wait till we get to the next Fibonacci level, which is the 1618, and let's see where that is, just to look, just to see it. It will happen at about 137.20 is the next level. So what you would look for if you're trading price action is you look for an inside candle at the 137.20 level, then to shoot it back up. But the more, I guess, how can I word this correctly? The trade that is highest probability is a selling trade. Okay, so we're really not interested in buying this particular one at the moment, even though I still feel that fundamentally it's priced all incorrectly, but I just do not have a single reason to be a buyer. All right, even if I look at a 15-minute chart, there wasn't no gapping on this one. All right, does everybody understand the reasons for this? Someone's mentioning, could you please check on a T chaser? Yes, I can tell you that on a T chaser, your actual entry would have been this candle up here. This candle that I'm highlighting up here would have been my T entry into this market. Stop would have been there, then it's moved to here, then it's moved to here, then to here, and you're still in it. If you did not get this entry here, there was a re-entry on this candle over here. That was a re-entry, and if you're trading T-Chaser, you're probably in this trade from up here, and you're in 1,000 pips on the trade already. Okay, is anybody in on this trade from all the way up here? From there? Can I? Alan is. Well done, Alan. That's 1,000 pip trade. That's on the T-Chaser. This is where the T-Chaser really stands out. Your success rate with the T-Chaser, even if it's less than, say, 50%, when you hit these big trades, that's where you make it all up. Psychologically, it can be a little bit tough sometimes because we get whipped in and whipped out of trades, but on cases like this, that's 1,000 pip trade that you've just got. Okay. All right. So I have no reason to buy GBP USD right now. I cannot find a single reason. In fact, I'm looking for a reason to sell into it even further. All right. So that's where I stand with it. And let's see what develops. So it's just one-way traffic right now. Let's move on. Gold. Uptrend, downtrend. What do we think? Great. Everybody thinks it's uptrend. Excellent. All right. So we saw this trade inside candle trade over here, and you can see this trade has already given its rewards. At the moment, we're getting into a tight range, and what I can notice right now is I'm noticing a little bit of a triangle in there. Let me draw it out a little bit better, and let's see what it actually gives us. Okay, you can see it there on a daily chart. It almost has a flag-like sort of a pattern to it, where you have your flag that way, and then the expected break would be more on the upside. It's not really a flag; it is a converging triangle, which basically means a breakdown would be acceptable as well. Although it does feel like it's got a higher probability of breaking on the upside. Okay, now remember, breakout trades are a little bit tricky, a little bit trickier to trade psychologically, and also gold, you do need to trade a little bit bigger. It's just the nature of the way gold works. So this one is, we could get a little inside candle right over here tomorrow, but I don't feel there's enough room before we hit that top line, so I wouldn't really trade that one. What I would suggest on this one is, just if you're going to trade it, your best probability is either the big breaking candle downwards or the big bullish candle breaking on the upside. Okay, so it's a nice pattern. It's looking good. You just got to wait for that to happen, and I get the feeling we could get it in this week coming, because this range is getting tighter and tighter and tighter. Non-farm payroll at the end of the week. There's a high probability that we're going to break out one way, up or down. Doesn't really matter. Okay. So if anybody's trading gold, look out for that one. Let's move on. Let's have a look at the US yen. All right, the US yen. Last week we spoke at large about Japanese bank interference. If you can recall, I said Mr. Abe, the PM, said that they needed to create more jobs and to stimulate the economy, and the BOJ also basically came out and said that they're not ruling out um, more stimulus into the market to make the economy go into the way that they felt. Now, having said all of that, nobody did nothing, and the market was just doing what it's doing. And we did mention that as soon as we get towards that 111 mark, that the Japanese might start to get a little bit weary. Market came down, touched it, and immediately shot up. A good 300 pips off this double bottom. So if you look at this, who would consider this a reversal candle pattern? Those three there. Great. Everybody agrees that this is a solid reversal pattern. So if you were trading this, the actual trade should have happened at the open of this candle. Your stop would have been here. So we technically have not hit that T1. So that means if you really wanted to, we're almost getting the same price as if we did it on Friday. You're only 14 pips off the mark. Okay, now bear in mind you're going against a strong downtrend. Okay, the reason for your trade would be a double bottom and a little bit of fundamentals that you're hoping we get a bit of interference from the Bank of Japan. So everybody keep that in mind. Shall we trade it? Yes or no? Everybody please vote. If we say yes, I'll jump in on it now at market. At market, yes or no? Okay. This is interesting numbers, guys. It gives me a really good idea of what you're thinking in your heads. Let me count it. Give me 1 second. Okay, I've got more no's than yeses. I've got about 60% of you saying no, 40% saying yes. Um, Interesting. Okay, it's only a double bottom. It's not the end. I really like it. Okay, I won't trade it. I'm going to look at this. What I'll do, how about we do a compromise? Let me ask the question again, because I know when I trade it, a lot of you are going to be involved in this trade. How about if I put a pending buy there where I've just drawn the line? I'll put my stop over here and I'll take half the risk. Yes or no? Okay, all right. So that's unanimous. Everybody said yes except one person, two people. Okay, all right. So let's do that. So what I'm gonna do is I'm gonna take half the risk on this account. So I'm only going to risk 30. I'm going to go, instead of my usual 60, I'm going to risk 30. I'm going to enter, well, I'm going to try and enter at 112.40. Okay, and I'm going to put a stop at 110.75. So how much is that distance? Let me get my calculator out. So my stop is going to be approximately 160. So $30 divided by 160. I have to trade at about 18 cents. Now it is a US dollar, it's a Japanese pair, so let's go 0.02 and I'll be risking around about $36, a little bit more. Okay, so here I go, put my marker, right click, and I want to do a buy limit. I'm going to go 0.02. My stop, I want it at 110.75. And my target, I just put an arbitrary number on it right now. Let's make it 114. I'll come back and adjust it. And here we go. There it is. Clicked OK. So what I've done, you can clearly see where my marker is. I may get triggered in this trade, I may not, I'm not sure. But if the market continues to go down and gets me in, I'm hoping for it to push back up into that direction. Now, one important thing to notice, if I was going to trade congestion, it appears that we could get congestion in this area there. So notice that my 1-to-1 is inside the congestion, which is kind of good. So what I'll do now is I'm just going to make an adjustment, and what I'm actually after is about there, 2-to-1, but I will close out half the trade when I get to 1-to-1. Okay, I'll do that automatically. So I'll just place that one there. Is everybody clear on what I've just done? Does anybody have any questions? Someone has just made a really good point. Someone has said I could make a downward trend trade tomorrow morning. So basically what Lois is saying, these two candles, if I get a fractal over here tomorrow and it looks like that, I could take a break trade downward. Is that what you're saying, Lois? Yes, it is. Okay, so let's do this. If tomorrow, when we look at our chart, we have price action trade to trade downwards, if we have it, that means that we would not have been triggered, because where I've placed this buy is below this candle. So if tomorrow morning I have a setup to go in the other direction, what I'm going to do is I'm going to cancel this order and place the order in the other direction. Does everybody understand that? This is what trading is about. I'm not trying to be correct. All I'm trying to do is go in the direction where the highest probability lies. Okay, right now I'm trying to trade off this in that direction. It is a heavy downtrend. All right. If tomorrow I get this in this direction in a heavy downtrend inside the center of those moving averages, well then this will override this bottom, and I'll have enough room to get to the bottom as well. So I'll delete this order and I'll place a new order in the other direction. Okay, so there you go. All right, so I've placed a uh, a buy on the US yen, which we'll have to monitor tomorrow morning to see if we cancel out, or we may get, if we get triggered tonight, that means that the setup for tomorrow just will not happen. Okay, everybody understand that? Because if I get triggered tonight, I've gone here, which means I cannot get an inside candle for tomorrow. All right. Okay, let's move on. Euro yen. Okay, finally, Euro yen has come out of that channel, so let's delete it. Let's delete the channel. We don't need it anymore. And let's have a look at the Euro yen now. Okay, Euro yen has got a very similar setup to the US yen. I'm not going to trade it on both. I've placed one order in one. Okay, and the other one has got a double bottom, so it's got a better reason to try and go in that direction. If I was to trade this one, it's purely more speculation than the other one. Can everybody understand the difference between this Euro Yen setup? It's the same setup. Look at that candle formation there, and have a look at this one in 1 second. Give me one moment. Have a look at this one here. They're almost the same, but the difference is that this one, it's a double bottom. Okay, double bottom, big difference. All right, so that means I'm not going to attempt to trade this one, but I'm going to look at this. I'll be interested in this one if we come up to there and then look for a sell if that happens. At the moment where it currently is, let me just look at a couple of different time frames. One moment. Nothing happening on the euro yen at the moment. I just got to sit and watch. The only thing that you could have traded here is if you've possibly got a T chaser, which you would have got on this candle there. That looks like to me like it would have been an entry, and you're still writing it down. Okay, so euro yen at the moment, there's nothing. Let's just sit and wait to see what we get. Kiwi dollar. Okay, we hit our target on our Kiwi dollar trade. We traded this combination in the upward direction, and we hit our 1-to-1, and the second half of the trade, basically nothing happened. Okay, so that was good. It's very, very noisy Kiwi dollar at the moment. Look at this. A lot of noise in this area here. Um, this top line is holding. We haven't come up to this area that I was very interested in over there. I thought we were gonna. We got very close. We broke it upwards, and then all of a sudden it came all the way back down. We've got a big gap this morning as well. That has not been closed. There's that gap there. The market looks like it's going to threaten to try and close that gap up. Let's look for a trade. Give me 1 second. If anybody can see something on this, please type it in, and I'll have a look at it. Very messy chart, this one, guys. The only thing that I can really say about this, I will say that it looks like we're heading in an uptrend, okay, since that point there, but it's just too noisy. What if you wanted to trade Kiwi dollar right now, that your best bet would be to trade the noise in there. So that means the way that you would do that is just draw yourself a congestion zone. So let me do that and step down a few time divisions. Let's zoom out, even go into say a 1 hour or a 4 hour chart, for example, or probably 4 hour. And then what you're looking for is you're trying to trade in there. So like, see, there's a nice inside candle back up. You see there's a nice one right there, back down. So we can look for one around about here to head back up that way. All right, so if you're going to do that, I've dropped down to my H4 chart. So I'm on a 4 hour time frame now. And you're going to look for a price action inside candle off this congestion zone. Okay, now that congestion zone it's 190 pips, so there's plenty of room in there. It's the only thing that I can see right now. While it's messy, chopped up, and congested, what you got to be able to do is, if you still want to be active in the market, is to identify that and change your style, drop a time zone, and go into sideways trading as opposed to trend trading. Is that clear for everybody? Do we understand what I mean by changing mode from trend to sideways? Okay, fantastic. All right, so that's our plan for Kiwi dollar. Just keep an eye over here. What you can do, if you don't want to look at it too much, just put an alarm somewhere close to the edge there where I've just drawn that marker. The way that you do it, if you don't know how to do it, the easiest way is get your crosshair on your chart where you want it, and then right click again. When the menu pops up, the first option says buy a limit. Okay, so click on it. Oops, no, sorry, wrong one. I think it's the trading option, the second option. Then go across, buy limit, stop limit, and then here alert. Click it, and now notice on my chart that little arrow there. If price touches that little arrow, you're going to get your computer's going to make a sound. Go have a look at it, and then you might be in a position to start to place your order. Okay. Now remember, I'm not trading because we're at the edge. I'm only going to trade if I get an inside candle or an engulfing candle. I'm still going to apply price action principles, but I'm going to apply it right on the edge. Okay, let's move on. Euro Aussie. Euro Aussie, I had a line drawn through here, I think last week or the week before, I can't remember. We've broken out of it. We're coming out. It appears now our moving averages have crossed. It appears that we're in a downward trend as per our definition. So what does that mean? We're also in this hotspot too. We're right on this hotspot. But notice we're in the hotspot, but there has not been an entry up or down. There's been no entry signals. Look at these candles, nothing. Okay, and this candle's gone higher than that one, so these two will be nothing as well. It's a really undecided chart at the moment. I would this week, guys, probably stay away from the Euro Aussie this week, especially tomorrow. The Euro, to give you an idea, just a heads up, say Aussie dollar tomorrow after China and after RBA moves, say 120 pips, this one here will move at least 200. So if you like good fast movements, well then yes, come towards it. But otherwise, I would probably just stay away from the Euro Aussie, especially with this pattern formation. Okay, it's getting tight on a hot region, which basically spells out it's either going to explode in one way or the other direction. Now, if I can pick the direction with good price action, well then I'm happy to trade it. But if I don't get it, I don't want to speculate on it. Okay, so if you haven't got that much experience, probably this is one to watch and gain some live experience monitoring the markets. If you've been trading for a while and you want to have a go at it, then by all means, limit your risk, and it'll be a fun day for you tomorrow. Okay. Any questions on anything that I've covered today? Anybody want to ask an off-topic question? I'll just quickly summarize what we've done and I'll address those for you. Aussie dollar, we're coming into a converging triangle. Let's look for entries. I don't feel we may have enough room to trade back up. We've got to wait two more candles. Otherwise, a breakdown or they'll break out on the upward side. Euro USD, we've noticed that we've got a little bit of a channel. Tomorrow, we will find out if we've got a inside candle formation that will allow us to trade back up the channel. GBP USD, we've broken through the double bottom. We're kind of in no man's land. If anything, we're going to wait for a pullback to find price action entry to resell again. Gold, tightening on a converging triangle. Keep an eye on it. We slightly favor the upward break, but we will take the downward break if it comes. US yen, we have placed a pending buy at 112.41.9 with a stop at 110.75, target 116.06. We've taken half the normal risk on this trade. If we do not get triggered tonight and tomorrow we have an inside candle formation for a sell, we will cancel the order and go the other direction. Euro JPY, it's in free fall, nothing's happening. Let's just keep an eye on it. Kiwi dollar, very, very tight. If you want to trade this one, step down to a 4-hour time frame and look for price action on the edges. Euro AUD, a little bit on the volatile side, especially this week. So if you haven't had much experience, look from the sidelines and just try and gain that experience that we need. Any questions, ladies and gentlemen? If there's no further questions, we'll call it a day today. We'll see you on Thursday, same time, 3:30. I'll dig up something interesting for us to have a look at. So even for those who have been with me for a while, we'll look for something new, and let's see how we go then. Other than that, I hope you all have a fantastic trading week. Any questions as usual, just please email me. Just respond back to the email that you've received as your invitation. That's where you can reach me, and I'll see you on Thursday at 3:30. Bye for now.